Hey y'all, we had some audio issues during the recording of this episode. We've cleaned it up the best that we could, but we're sorry and we will try and get this a little bit better next week. Thanks for tuning in. Here's your episode.
Hey y'all, I'm Celine Evans.
And I'm Chris Evans.
Welcome back to Georgia Living.
Oh, it's good to be back, honey.
It's been, so we've had a what is it called? Quadremic?
Everybody in our darn house is sick. We got Rob Doerr with us from Equity Home Loan Advisors, E-Home Loan Advisors. So, Rob, we're glad to have you with us. Can't wait to hear what's going on in the real estate market.
Yeah, thanks, guys. Good to see y'all.
Is your family still safe and not sick, or did they get it?
We all sporadically got it at different times. In fact, my little guy was homesick yesterday.
Oh,
So gross.
so it's the flu, COVID, norovirus, and RSV.
Yeah,
And
a lot of stuff.
yeah, the pediatrician said that even kids are ending up in, urgent care because of RSV, just regular common cold.
So much fun. Fortunately, as of yesterday, everybody is out of the house, back in school, back at work. So, a week down, but glad to be back.
Yes.
And we don't batch these episodes. Like, we record one a week. We try and get it out to you same day. Can't always do that because we talk about real-time stuff. So we're excited to get into where our rates are today with Rob. But we've got some things going on in the house outside of sickness. So you escaped. You were the only one that wasn't sick, and you have made some more progress around the other house.
I'm clean. Just kidding. So yes, I've been hand painting everything, and I decided that I wanted to make one of those murals where, on the outside, really old-timey 1900, maybe late 1800s advertising where they paint on the outside of the brick, right? So Coca-Cola or some pharmacy, some in drugs, or, something in Sons.
Yeah, think early 20th century.
Yeah.
You didn't have billboards, so you'd paint on the old brick buildings downtown.
So I was actually inspired by the Great Locomotive Chase that happened in Kennesaw in 1864. I want to say, I might be wrong. And their whole ordeal started because they were staying at, or part of the parties who were involved were staying at the Lacey Hotel, which I believe was in Marietta.
Okay.
And so, I just thought, oh, how would they have advertised it? What would have the signs look like? I just guessed. So I put a whole bunch of things together, and it looks like the Evans Hotel in our house now. And I definitely put a picture of that.
Oh, yeah, we'll definitely put the picture up.
But it's in the stairwell on the really top part of it. And I had to get on a giant ladder. I admit I was
about 15 feet up in the air.
I was cursing up at the very, very top corners. We did this on the coldest day of the year, and even then I was sweating in a tank top at the very top. I don't know if that was because I was nervous and shaking and cursing, or yeah, it might have been that, but pretty proud of that. And I want to get old and just stare at that and say, how the heck did I get up there when I was younger? So
there you go.
Yeah.
Rob, any aversions to ladder work for you? I'm not a big fan of heights, not with ladders.
I like to think I'm a pretty tough guy until I get up on the ladder, and then I realize that I'm scared and I need to get down.
I'm like
ladders.
Yeah. It's not a heights thing. Like I've been attached to a parachute, paragliding before.
Yeah.
Like it's not about heights. It's about the fact that ladder, and I don't know whether I can trust it or not.
Yeah, and then our son comes and then bounces a little toy on the bottom of the stairs, and it's up at the top, and I dropped the F-bomb.
No kidding.
I did. I dropped the F-bomb.
So we did that. We've got that project going.
Yes.
And then we got a cleaning day. We got to tackle our 11-year-old son's room.
I don't think we're alone.
No.
I really don't. I think all kids do this. They hoard everything from butterscotch wrappers that are empty, right? They
That
just
was like 40 Tootsie Roll wrappers in his room.
pudding cups,
Yep.
right, with the spoon still in there. I'm like, I missed that spoon, right? I need that. 6 packs of trash.
It was the full declutter. We went through. It's going to be. We're in growth spurt mode, so we got to go and do some shopping. So I was going through, getting rid of all the old clothes, putting the donation bins together, getting the old books that he's too old for now. 6 bags of trash, 2 bags of trash clothes, and then 1 giant box of books and clothing for donation. So that was an entire day to go through his room.
Some questionable things that I found too. Now, obviously, I'm not going to embarrass my son.
Oh,
but
not yet.
But there was this. I hope that people can see. But I found a drawing that context whatsoever, and I just looked at it and going, "What the heck?" So, okay, hopefully, I can put it on.
Show that up. Oh, so we asked him about it. It's grandma got run over by a reindeer.
You know, I see it, right?
Yeah,
when I first saw it, I was like, what the heck?
Pretty good.
Hunting in reverse. Love it.
I guess so, right? I mean, this is just... Oh, you know what? If I can show a picture like that, I can show a picture of the...
Of the stairwell?
The stairwell.
Yeah, you can.
There's the stairwell.
I don't think that one comes through as well.
Oh, yeah.
We'll have it on the show notes, but...
I've seen it. You showed me last week, and it's really amazing, for real.
I will never go back up there in my life. Never.
That probably makes 2 of us, but I'm going to knock on wood. We'll see. All right, so we've got some stuff going on here locally. Last year we had House Bill 581 passed. This was the statewide homestead exemption. And now it is up for opt-out in Cobb County. So if you remember, the wording in the bill allowed for local municipalities to opt out of the statewide homestead exemption. So
what is a homestead exemption to begin with? Because I think a lot of people don't understand this and when you claim it.
Okay, so one of the reasons why real estate is the owning real estate is so important is because you don't just own the house, right? When you buy a house instead of renting, every month when you make that payment, a portion of it goes towards the paying down the loan, which is you owning the house more and more, and then a portion of it goes towards interest. Well, there's a lot of other benefits that you get for being a homeowner anywhere in the United States. And one of those here in Georgia is the homestead exemption. So if you're a renter, you're the person who owns that property that you're paying rent on every month. Every year, those taxes go up. Those taxes go up, so does your rent. When you own a house, though, there's a homestead exemption which says to the government, this is where I live. This is my primary residence. This property is not being used for business purposes. It's not making me money. This is just home. And the government gives you benefits for that. One, you get the mortgage interest deduction, so everything you pay towards interest, you can write off your income every year.
That's a lot of money.
That's a lot of money.
Yeah.
That could be, $15,000, $18,000, $20,000 per year.
Mm-hmm.
So, or more. Then you have the homestead exemption, which locks your purchase price as your basis for how the government taxes you. So in Cobb County, our property taxes are built into 3 tranches. You have 1 tranche, which goes to the general fund that pays for your county commissioners, salaries, operational budgets, and in Cobb County, your police are in the general fund. Then you have your emergency. This is fire and EMS in Cobb. And then you have your school. So those are the 3 tranches: general, emergency, school. Your school, you stop paying into once you hit your senior exemption. So you get additional exemptions on your property once you're, I believe, 62.
62.
Yep. And then your emergency, you're always paying into. So your general fund is, your assessor comes out and says your property is worth $300,000. You're assessed at 60%. So your taxable value is $180,000. Your mill rate is based off of that. Well, for the general fund, if you have a homestead exemption, that number is always your purchase price. The emergency in school will vary. That'll float. That's why it's called a floating homestead exemption. But the general will always be locked in. So your property taxes will increase annually as your emergency and school taxes go up. However, your general fund will always stay the same. So if you own a house in Cobb County for 30 years, hit your 62, now you're paying $500 a month in taxes because your general fund was locked in at such a low purchase price and you're no longer paying into the school fund. So that's a general way that the homestead exemption works. House Bill 581 put in a statewide exemption that has caps and regulations and all sorts of stuff. And I don't know the intricacies of how that works, right? I don't sit here studying property taxes every day. But what I do know is that our county commissioners have said that in Cobb, it is financially better to use the old floating homestead exemption instead of the new floating homestead exemption for today. So now what are they doing? We've got a bunch.
Especially for schools. They really do need the money. Because if you have, this and you don't opt out, then the schools get less.
Yes.
Yes.
So we've got an article right here. I'm trying to see if they say anything on it.
I believe that's eastcobbnews.com and Wendy
Parker was the author on this. It doesn't mention the specific details, so the statement doesn't elaborate. Cobb does offer the floating homestead exemption. Here's what's happening. Cobb is putting together town hall meetings. Their first one is tonight, Tuesday, January 28th. The second one is February 11th, and then there's another one February 25th. The board is scheduled to vote on the opt-out resolution at its regular meeting on February 25th. So, if you're curious about how this is going to impact you, go to your Cobb County's website, look at the town hall schedule, and then go and attend. Usually, when they run the town halls, they're doing it all around the county. So there'll be one in East Cobb, one in West Cobb, one in North, one in South, probably a few more. But I highly encourage everybody, pay attention to this, because if you own a house, this is going to impact your wallet. And if you don't own a house, well, one day, hopefully you will, and it will impact your wallet then. So.
Yeah, and speaking of taxes, so, we're in East Cobb, so Cobb County is our specialty, but we do other deals as well. And Rob, you were talking about how different it is for different counties. How different is it?
Well, it totally depends on the county itself. I've seen some houses in Stone Mountain that are $200,000, and I pull up the tax bill and it's like almost $5,000. Whereas if this were East Cobb or Cobb County, the taxes would probably be like $2,000. So right. Certain pockets, certain areas are just, I think we're all a little spoiled in a good way with taxes.
Actually, monthly payments too, right?
What's that?
That affects your monthly payments.
Oh, greatly. Yes, absolutely. And it can affect you from qualifying for a loan. Like there's a lot of folks that are right on the border, and I tell the agents like, hey, let me know what the address is before you go out to the property so I can look the taxes up, because those higher taxes could push them into not qualifying territory,
Seems like something that is commonly overlooked.
Yeah, absolutely. But yeah, all those things matter. Even homeowners insurance, when somebody's really on the border of trying to qualify for as much as they want, which is what they want to purchase. Homeowners insurance factors in, I've seen homeowners insurance where if the roof is too old, the homeowners insurance is astronomical, and that can affect qualifying also. So, but on the flip side, you don't probably want to be buying a house that you're barely qualifying for anyways,
That's true. That's true. You want the house to be a blessing, not a burden, like you always say.
Yep.
But so what are some of the metro counties, what are some of the lowest taxes around here for people who aren't familiar with Atlanta?
Well, fortunately for us, like I said, on the north side, Cobb County, Cherokee, Canton, all those areas up there. Fulton County is obviously higher. But yeah, anything Forsyth, all those counties on the north side generally tend to be a lot lower from what I've seen.
Okay.
In your experience, do you feel like the metro counties, so you've got there's Fulton, and Fulton has always kind of been a nightmare to deal with.
Yeah.
You know, from either operationally, right? Builders don't like doing permitting there. It's not as efficiently run, in my opinion, as say Cobb or Cherokee. Do you feel like the metro counties of Cobb, Cherokee, Forsyth, Gwinnett, do you feel like they're kind of on par with each other?
For the most part, honestly, Gwinnett seems to be in recent years a lot higher than I would think it would be. So I think Gwinnett is, from what I've seen, higher than where we are, Cobb and Cherokee and that sort of thing. I will say DeKalb County, like those taxes in a lot of cases are outrageous, in my opinion. Some of those properties. So, but yeah, on the north side where we're located, tend to be the lowest that I've seen.
Okay.
It makes it very attractive.
Yes.
And property taxes are based around, the services that the counties are providing, right? So if you go further out, if you're going into like Carroll County, the Douglasville area, going out west, you're going up into like Gilmore County, LRJ in the north, you're probably going to see taxes being even lower there, I would presume. What do you think, Rob?
Yes, I would say so. I mean, the farther out you are, yeah, they tend to get lower for sure.
So that's one of the factors that goes into, the location, the price, the condition, when you're trying to figure out where you're going to live, that taxes are an important thing to consider.
This is as exciting as taxes will ever be for me.
Yeah, it doesn't get much better on taxes.
Riveting.
I know it's a really bland topic to begin with, but it really does mean a lot of money that
important though, yeah. I mean, it factors into your monthly payment every month in a big way. So it's a big deal.
Yeah, I know, but it's so dry.
The worst experience I think I've ever had with taxes was when we bought our house, because the previous owner had a senior exemption. So her tax bill was like $650 for the entire year. And when you do a real estate closing, attorneys have to base the taxes in the proration off of
the previous year.
Yeah. Right? Not the assessment. It's the previous year. So we paid like $50 for our prorated share. It felt like it was like nothing. And then we get a tax bill the next year, and with our homestead exemption, it's like $3,000 plus. Mm-hmm. So what nobody prepared you for in this is that when you own a home, your property tax bill is escrowed, and they have to keep enough on file to pay those taxes when it's due. So we've been paying into our mortgage for like 6 or 9 months, and only enough for the $650. Well, we ended up, the bank paid that out, and then we had to have that adjusted, which increased our payment, and then we had to pay like 150% until we had repaid the previous tax years. So it's just for a cash flow perspective, it comes out of nowhere and can hit you there. So just make sure that if you're ever buying a homestead exemption, where there's a senior exemption on the property, know that the first or second year that you're in that property, your mortgage is going to adjust.
It's going to sting.
And it's going to sting a little bit. So just, it happens, prep for it. All right. So that I think covers our community updates. We've got Rob Doerr here. So Rob, you're with EOM Loan Advisors. Where are you based out of?
We're in Roswell, Georgia, just off of Highway 92.
Right down the street.
Yeah, next door neighbor.
Yeah. So what's happening in mortgage rates? Well, we've got a new president now. Is that changing anything?
I feel like now that we're in a new year and that the election is over, I think everything's a little more calm now, and I'm starting to see rates as of the last week or so start to trend down a little bit. Hopefully, it continues that way. But yeah, I looked at rates before we started the podcast, and today we're around 6.375 on a conventional 30-year fixed. So yeah, much better than they were a month or so ago.
That's great. To put it in context, where were we about this time last month?
I'd say probably around 7.
Okay. Yeah. So that's actually that's a big dip.
No buyouts whatsoever, just pure rate.
That's with the standard. Anytime you get a quote from a lender, they're always going to quote it with like a 1% origination fee, but that's just with an origination fee. That's not with like buying the rate down further than that with discount points.
Okay. I know it's the fun world of finance too, right?
Oh, well, I mean, Wall Street is going crazy. You know, you've got the battles happening right now with AI and everything. So, I mean, we're inundated with all of these data points every day. You know, this is what happens in the tech sector. This is what's happening in the real estate sector. Rob, in a historical perspective, like where are rates? Is this, you know, would you be hesitant to buy today? Would you say, you know, I'm going to wait, I think they're going to come down further? What's your insight here?
Well, he doesn't have a crystal ball, but right?
I would hope he doesn't have a crystal ball. Rob, are you with us?
I'm with you. Oh, can you hear me?
Yeah, now I can.
Okay. I would say that no, it would not make sense at all to wait for rates to go down. Because, like I always say, if you wait for rates to go down, well, guess what? When rates go down, guess what's going to happen to home prices? They're going to go up because everybody's going to be flushing the market. So it's always better to, in my opinion, find the house that you like now. Rates are still in a pretty good place. Secure the house, move in the house. And then when rates do go down, you're already in the house at the lower price. And then you can always refinance into a lower rate at that point. So you're kind of being on both ends.
Yeah. So that is the price that you buy the house at. That is what we in finance call your cost basis, right? That's where you lock in and you use that to determine how well you do financially on the property. And you know, if you buy the house for $400,000 instead of $450,000, you've got $50,000 off your cost basis. So just as you said, Rob, it's if you can lock in at 400 instead of 450, when those rates drop and the price shoots up to 450, you know, you might get a lower monthly payment, but you're paying more, so that's going to offset it.
Yeah, absolutely.
So what are we, as far as like the mortgage market right now, Rob, what are processing times looking like? Somebody comes to you and says, hey, I want to get a house. How long is it going to take you to get me a loan?
Sure. Well, as we like to pride ourselves on, as you know, we don't speak for everyone's processing times. Our process, if I get a loan today, like for instance, I'm expecting a contract to come in today from one of my agents, I'm going to have disclosures sent out. I'm going to have disclosures e-signed today. I'm going to submit the loan to processing today. It'll get most likely submitted to processing either late today or tomorrow. And I should have underwriting back by, what's today? Tuesday. So I should have underwriting back by Thursday. So which would mean we would have the initial approval back within, say, 48 hours.
Unheard of.
That's extremely fast.
But I do know most companies, I mean, I'd say on average, most companies are probably looking for, I don't know, a week to get underwriting back, I would say is probably average. Some more. I mean, some of the bigger banks and some of the larger institutions are a little more strict and have more set in stone turn times. And I mean, shoot, I've seen 2 weeks for some banks, you know?
Because it's just so fast and so unheard of, we have been able to go through with deals and win deals because of Rob.
Oh, yeah.
Yes, thank you. There's
been plenty of times where we go to a seller or their agent and say, look, you know, I know you've got a hot in-demand property. We've got a loan officer over here that can turn around and have us fully cleared to close during our due diligence period. And that has allowed us to win properties for our clients where others have not.
Right.
I feel bad hearing this information out there. Like, I hope other agents aren't listening to this and be like, oh, I got to use Rob now.
Because, you know, it's better than call centers.
Oh, yeah.
They exist out there. Really, I mean, you call and then you get someone who's, maybe knows a little bit, and then they pass it off.
And you know, Rob, you're not selling data that comes in to you. So, I mean, every company has their data policies, things like that. But if somebody comes to you and, you know, they give you their information, file their own application, they're not going to get solicited from, you know, you selling data to, like, ADT or any other companies around here locally. They're just working with you locally, and you know, they don't have to worry about that, right?
It's crazy. So what we do initially when I'm pre-qualifying somebody is I do a soft credit pull. which will not allow that to happen. And then when it does come time for me to have to do a regular hard credit pull, which is necessary for the loan approval, I, number one, take their information out of our system. So if they do try to sell it, you know what I mean? That's one workaround. Another one is there's a website called optoutprescreen.com. And I have the customers go to that website, plug in their information, and that is supposed to not allow these bureaus to sell their information off. So usually that works. Sometimes, somehow, I don't know, but sometimes it doesn't work and their phone, lights up anyways. But to answer your question, no, we don't sell any or share any information. Equifax and some of those companies are able somehow to sell your information off, which is unfortunate.
I think I'm getting a sense from just, my interactions with the internet recently that privacy is becoming more and more important. And more people are being concerned with this because they're starting to see what happens, right? It's
data breaches
between the cookies and being followed and, just having, Wall Street be able to tap into exactly what you need. And kind of reinforce that whole trying to keep up with the Joneses mentality. And there's a lot to that that I think people are starting to open their eyes and pay attention to. You should definitely, so it's optoutprescreen.com. I'm going to check that out.
Yes. Very easy. All you do is put in your name, your social, date of birth, home address, phone number. Yeah, that's it. And just hit enter. You can opt out for 5 years or you can opt out for more. I think I forget. There's 3 choices, but usually it's just for 5 years.
Okay. Well, I know we just did the DNR, or not DNR, or the DNC, the do not call list, not do not necessitate. Jesus. Thanks for not. Yeah. So because last year in Georgia, we also got a new law that prohibits real estate wholesalers from just calling you out of the blue to try and buy your house. So this new law requires, one, you can't be on the you have to be on the do not call list. But if you're on the do not call list and they call you.
What about text messages?
I don't know about text messages. I know the calls. And they call you, then you can file a complaint with the Georgia Consumer Protection Bureau. And there's a whole task force designed to enforce this. The only people who can call you, I believe, are insurance agents, attorneys, and licensed real estate agents. So I'm getting a lot less of these calls on our properties. But when I do get the call, I'm trying to get their information. I'm saying, well, I might consider it, but, give me your information and I'll call you back. And if I haven't had anybody give me their information yet, because they probably know that it's illegal.
No, they hung up on him.
Yeah, they hung up on me because it's illegal.
I'm going to try that. I didn't know that. I'm going to start doing that.
Yeah. So you can also ask them for their real estate license.
Okay.
And say, well, let me get your information and what's your real estate license number? Okay. Oh, we don't have one. Well, guess what? It's now illegal. So all you got to do is take that, go to the Georgia Consumer Protection Bureau. I think we have it on a previous episode. So the link's on selectrealty.com in the show notes from a previous episode. You can just search do not call list and make your complaints. So that's great because they're kind of pariahs. They prey on the elderly, they prey on people. And there was a new article that just came out recently finding that homeowners in Metro Atlanta gave up $1.2 billion in equity of their homes by selling to corporations. The stupidest thing you could ever do with your real estate is to sell it to a darn corporation because they're just going to take as much equity as they can out of your deal.
Unless they give you $2 million for a $200,000 loss, sure.
Out of all the transactions, there might have been 2 where the owner benefited a lot more than the corporation did.
So, okay, everything's, in a pinch right now. We have higher interest rates, although they're coming down. What about some creative solutions to offset this? Do you have any suggestions? Does Rob have any suggestions?
As far as creative,
like seller concessions, buying down the rate, like what is available out there? I guess it's not as creative as you would think it is as in the term creative, but there are ways because, you know, like we said, that rate that Rob said is a general without the origination fees in there, right? But other than that, you don't have any buy downs. So what can you do to lower that right now?
well, so Rob, do you want to explain how a buy down works?
Yeah, sure. I mean, there's always the option for the consumer, like, you know, the borrower to pay additional money to get a lower rate. But the conversation I always have with my borrowers now is, hey, any money you spend today to buy your rate down, well, if you're refinancing in 6 months or 12 months, then that money you spent to buy the rate down vanishes, right? So I think it's better. I think it's better to keep that money in your pocket right now, take the current market rate without paying to buy it down any further, and just wait until rates go down, you know, because that's what we anticipate, and then just refinance to a lower rate.
So it's exactly what the name is, buying the rate down. So for each, what percentage point is it?
It varies and fluctuates with the market. Rob, what's the buy down look like right now?
And I'm glad you brought that up, because here's the thing too, and this is a little frustrating. So when somebody calls any lender and says, "Hey, what's your rate today?" Well, there's no rate. There's a rate sheet that has all the rates with all the associated costs. So a lot of times what I will do is just say, "Listen, I'm going to send you over basically a breakdown of all of our rates, and then we can sit down and go together over which option is best for you." And it basically spells out, here's the rate, here's how much that rate costs, here's this rate, here's how much that rate costs, and we can just kind of go through together and find a balance of like, hey, I know you don't want to buy the rate down, but I would recommend going with this rate because the cost is minimal, and then you can still get a good rate without paying too much for it.
For now.
Makes sense.
Yeah.
And you know, I just had a conversation this morning with one of our clients who was actually asking me about doing their first refi. They bought about 6 months ago and did a jumbo, and I guess there's been some improvements in the jumbo market. So he's looking at saving like $1,000 a month on the mortgage payment. And, you know, the question that he asked was, you know, hey, this loan officer, and it wasn't you, Rob, but is this loan officer doing this and coming out and saying, hey, it might be time to do the refi, this is what we can save you, because it's in my best interest, or is it because it's in the loan officer's best interest? And, you know, I'll be interested to hear your answer, Rob. My answer was it can be both.
Sure.
And, you know, I think when you're doing a refi, you want to see what that costs you versus what it saves you, and how many months of savings does it take to recoup the cost.
That's exactly right. That's exactly right. So what we do is this. What we do is there's absolutely benefit for both parties because, you know, we're based on commission, so we do get paid again, which is always nice, but that is not the reason for any loan officer to try to pitch a refinance to a borrower. It's got to have a tangible benefit. So the way we do it is we look at how much the total dollar cost would be to do a refinance, and then we factor in the monthly savings, and at that point we can come up with a break-even point and say, hey, if you refinance, you're going to save $200 a month. It's going to cost you X amount of dollars in closing costs. Your break-even point is going to be 7 months. So as long as you have this loan for 7 months or more, it makes sense to go ahead and refinance. So it's a real tangible thing to see. Here's how much it costs. Here's how much I'm saving. And at that point, we can determine if it makes sense or not.
So if you're making a drop right now, or if you're thinking about refinancing right now, and you think that rates are going to drop further in 6 months, then it might be worth waiting 6 months before you do that, because you're going to recoup your fees in 6-7 months and then basically break even to do it again. But if you think that you're probably not going to refi for at least another year or 18 months after that, then it might be worth that move. Or it's just saving you so much money, like in his case, $1,000 a month, you want to make that refi.
Yeah, that sounds like a no-brainer unless you're paying astronomical closing costs, you know.
Exactly.
I will say this, this is the way I prefer to do it, and I've refinanced my home like 3 times. and I've done it this way every time, is I prefer myself to do a no cost refinance is what it's called. And so the way that works is, let's say you were going to refinance and your rate would be 5.5%. Well, maybe instead of taking 5.5%, we look at like 5.625, or a rate that's a hair higher, which would give us as a lender the ability to absorb the closing costs for you. So at that point, that's why they call it a no cost refinance, because it truly would be no cost to the borrower, because we would absorb the attorney's fees and all the closing costs. So when that's the case, it's kind of like, well, if you're not paying anything to refinance and you're saving whatever per month, it still, in my opinion, makes sense because it's basically free, you know? And the reason I like doing it that way is because, let's say you refinanced at 5.5% and paid the closing costs, and then rates went down and you refinance the next year. Well, guess what? You're going to pay closing costs again if you're going to refinance again, right? So if you do a no cost, you can just, you know, do a no cost refinance. If rates continue to drop, you can do another one after 6 months, you know, and just that's just the way I prefer to do it, instead of, you know, adding more closing costs into the loan.
So this might be basic, and but I don't think it's said. That term, so say if it's a 15-year term or a 30-year term, it starts over.
It does start over. We do have some investors, though, that will allow us to, let's say you're 2 years into your 30-year fixed, that will allow you to start at 28 years. So you're not really starting over again.
Really?
Not all like that, but we do have a couple of investors that will do that, which is nice.
That is nice, you know, because one of the things that I tell people is, you know, factor in the time. You're 6 months, you're going to carry the debt 6 months closer to retirement. You're going to, sometimes it's still a blessing, right? If you can afford to pay $1,000 more a month, do the refi, keep making that payment, you're going to pay it off much faster because you're putting now $12,000 a year more into principal instead of interest. So you can look at it both ways. If you're going to just pay that minimum every month, then yeah, you're definitely going to add on whatever time by starting that clock over, because what you have is rare. I'm super glad to know that that's there, but a lot of folks do not have the ability to kind of reset at 28. So you got to factor in the time or the planning, because if you're going to save money, keep making the same payment, you'll pay it off a lot faster.
So where that would come into play is, say you have parents who have paid their house, haven't refinanced for a very long time, and are over halfway there in paying off their home. You have to compare, you know, refinancing and resetting that clock versus what they've already done and what they have left, and if they can still afford that payment. So it's a balancing act between those two.
Absolutely. Well, great insight. Rob, any final thoughts? Anything else that you want to share while we got you?
No, I'm glad it's a new year. I'm glad the election's over. I'm glad everybody's ready to get back to work and hopefully have a prosperous and good 2025.
Yeah, and the weather is looking a lot better. It's going to be warmer now in the coming days, right?
Yeah.
Highs in the 50s, 60s sometimes.
We're still going to be in the 30s. We're not in the needs just yet. We might have another. Glenn Duncan's our chief emeritus meteorologist for Channel 2. He's awesome. He's posting that there may be another Arctic or polar vortex event, maybe the early February.
What's that you said that? So, okay, okay, for people who aren't science minded, right?
Yeah.
You've got the Earth, and then you have a little hat on top, which is a cold hat, and it goes over the Greenland, everywhere.
Vortex.
Yeah, and then when you have a warm area poking into that cap, then that cap moves and shifts. So that cap comes down to us, and then that's what causes that really, really cold weather. And that's happened, 9 times this year versus once every how many years?
So I don't know all the science behind it. I just kind of regurgitate whatever Glenn Burns says. But he did say, one thing he said is that these polar vortex events that we've been getting, on average, we get one every other year. And if we get one in February, early February, that would have made 9 polar vortex events that happened this year or this winter. And, with as far as the cap, right, the polar vortex, that destabilizes in winter in the northern hemisphere, and that's when you start to see that cold air come down.
Yeah.
So hopefully we are through most of that, and we can all just kind of get back to it and focus on getting outside and touring some homes, because it's cold at the open house I did last weekend.
Well, pretty soon it'll be hurricane season.
Yeah. Well, some Q&A that I wanted to get into, because we've had some really good questions come from real estate agents over the last week.
Oh, yes. Can I ask you?
Yeah.
What do you say to clients or sellers about market timing? Is it a good time or a bad time right now?
Yeah, so I guess several of our agents have had conversations with different sellers wanting to know, okay, do we list now? Do we wait a year? What are we doing? Do we wait for rates to drop? Because there's a lot of inventory out there.
But it's just
yes.
with a caveat.
With an asterisk.
Yes.
Yeah, definitely. So the way that our market is working in Georgia right now is we have pockets. There are pockets of high demand, and then there are pockets where there's low demand. And it's based around how many properties are available for sale. It's that simple. If you're going to, I think I ran a search last week on Villa Rica, and there were like 50 or 60 properties for sale within, one zip code. And then I ran the same search in Cobb County. I think there was like 20. So you get half of the inventory for East Cobb versus Douglasville. And it's also about the selection. So if you go out to Villa Rica, you're going to find a lot of similar type homes available to choose from. So your opportunity cost is low. I don't have to buy house A because I can buy house B or C, and you get to really take your pick. And when buyers have that choice, it's a buyer's market. So the seller is in less control of the negotiation. Conversely, you come over to East Cobb, you're looking for a ranch. There's so few of them that you're still getting into bidding wars. You're still buying a property for over ask. I've seen several buyers posting in groups related to this that say, hey, we've offered on 5 homes up to $1 million in these school districts, and we're still losing out.
They weren't working with Rob.
They weren't working with Rob.
No.
But also their timeline, they only offered on 5 homes in like 2 years. So if you're a seller and you have a unique property, and by unique, I mean you're going to put it on the market, there's not another one that a buyer can go to and say, you know what, I'm going to buy this one over that one. Your home stands alone. It's completely finished. Your basement's done. Your backyard's done. It's landscaped. It's, to the nines. Then you're going to be fine. Sell your house now. But price it accordingly, because we are not in the market where buyers are going to overbid on a house that's at the top of its budget. If your house is worth between $800,000 and $900,000, you're going to list closer to the bottom of that range, $825,000, $830,000. If you're
there's also houses that need repair.
Oh yeah,
those are always coming up, and that is also a trend right now. People, when the interest rates were lower, they were able to afford the renovations, and their monthly payments were fine.
Oh, yeah.
But now they're stretching their budgets, so they don't have that margin to fix that home that you're wanting to sell, because the seller wants to sell it with the most profit, so they don't want to make those changes like new flooring, whatever it is that you need. But in reality, it's a tug of war and a balancing act, because now the buyers don't have that money. They don't have that luxury, and the sellers don't want to give that either. So you have to balance it.
As far as buyers, if buyers want to win in this market for 2025, the best thing you can do is buy a house that needs some work and then slowly do the work. The things that you want to look for are systems, right? You want an HVAC that is relatively new, and you're not going to have to replace it over the next few years. Your water heater and your roof, and then your siding and structure. If all of those are good, buy the house, update it.
We actually have a checklist of what we looked for in our investments in our book, which is From the Ground Up. So
available on Amazon.
Amazon and Audible, I believe.
Yep.
And this is if you are investment minded, frugal, really looking for the future. You know, you want to really deep dive into the numbers and do this right.
I kind of disagree with that statement. I think it used to be, for the last 10 years it was, but now I think this is an essential tool if somebody wants to become a homeowner. You know, it used to be that you had to do this stuff, right? When you're picking a home, there's only a few variables that you have. You have your price, your location, and your condition. And for a lot of people,
but that's
location.
Yes.
So for a lot of people are having a trouble kind of reconciling what they see available for sale and where they want to live. And they're not finding the perfect house. Well, guess what? The perfect house, if you're buying something resale, follows the 80-10-10 rule. 80% of it is perfect. The layout, the location, you can live with that. It's great. 10% you can fix. Needs cosmetic, it needs updating. I want to renovate the kitchen. That's fixable. 10% you can live with. If you get to that level, it's about as close as perfect as you can get on resale. But a lot of people are having the difficulty. I need to be in this school district, and I need all of the stuff in the house. And by the way, my budget's only this. Well, guess what?
Yeah.
If you want to be in East Cobb and you're a first-time home buyer, this is not an area for first-time home buyers.
I'm actually seeing a lot of that from people who are relocating. So they rely a lot on the internet, and it's a great resource. It really is. But a lot of these forums, they're very, I want to say chirpy. Like they just repeat the same information over and over, which is
it's an echo chamber.
Alpharetta schools. You know, I mean, it seems like they just make a top 10 list and then everyone sticks to that.
Yeah.
When in reality, the Metro Atlanta area offers you so much more in different areas, and you really need somebody who is familiar with our area to determine that instead of just relying on the internet. So that might be a factor in why we are hearing, you know, from people who are relocating, hey, I have to be here. Sometimes when we deep dive into that, we realized that, you know, they just heard it from a friend. Mm-hmm. That's all that they knew. They never really lived here, or they did, and they lived in one area, and that's it. So
it might be a little bit more inconvenient to commute from like West Marietta, like Northwest Marietta, than it is to commute from East Cobb, because you're not 5 minutes from 400. But if you can go in East Cobb, and for $500,000, you're getting a home that's 2,800 square feet, and it's not updated, and you know you have old systems and an older roof, and it's going to require all this deferred maintenance to be done. Versus take that same $500,000 and go to like the Harrison or Alatoona district, and you're going to buy a 4,500 square foot house that's 20 years newer for the same price. It might make sense to be in a different district. All of those schools are very highly rated. They're all 8, 9s, and 10s on great schools, but you get more house for your money a little bit further away in the location. So I believe that the buyers who are going to succeed right now are the ones that are going to make those concessions. They're going to pick the best area they can afford, not avoid buying until they can afford the best area, because that's poor financial decisions. So definitely the creativity is coming in buying something that needs some work, making it your own. Then you're getting the sweat equity, and you're getting it at a lower cost basis. We just had to do this with some clients who looked for a year for a ranch. They ended up not finding what they wanted, but we did find a ranch. It needed a ton of work for rehab, but the The layout was perfect. The location was perfect. So they can do all the work. New HVAC, new roof, new paint, new flooring, new kitchen, new bathrooms. They bought it for $600. It'll be worth $900 when they're done.
On the seller side, I've heard a lot of things about people trying to take it step by step. And I know that you said, just if you have a unique property or if it stands out and it's not just cookie cutter and you need to sell, go ahead and list it, right? Yeah. You can get analysis paralysis. There's a lot of working variables in selling a house, so don't get analysis paralysis. But at the same time, I'll come back to it. I lost my thought.
Basically, if you've got a gem, you're going to get a premium for it. You're going to get a bidding war. If you have a property that has a lot of similar properties on the market, you have to price it accordingly. You cannot sit there on market for 6 months and have 2 showings and not make any moves to your price. You have to be aggressive. You have to drop that price until you're getting enough buyers into the property. It might not be a price that you like, especially if you bought in the last 4 years, but real estate is a long-term play.
Oh, right. No, so if a seller is trying to sell a home that they bought in the past 2 years, then their margin's probably going to be very little to none.
They're probably going to take a loss. You're supposed to hold on to real estate for 5 years. That is the historic rule of thumb. At 5 years, you're going to get enough equity to pay for all the costs that go into selling, plus have some money to walk away with from the deal. That's average. But we're not in an average market. We're not going to be in an average market for a while. We had a lot of changes. So you just have to be aggressive, and you have to have an agent who is on top of it, who is marketing the property. This isn't the market where you can go in and find an agent and put it on the MLS and have it sold in a day. It doesn't work like that anymore. You need skill, you need tact, you need somebody who understands what's going on and can answer your questions and provide you with real guidance and data.
And if you need proof of, that we know what we're doing, first of all, we do have the book. How many did you sell last year?
Last year, I personally sold 17 and you sold 75.
Congratulations.
Me too.
So we do know. Ask us. Our contact information is on our website. And
selectrealty.com. And let's see. So if you are subscribe to this, please do us a favor. Give us a subscribe on your favorite podcast platform, or click the subscribe button on YouTube and ring the bell so you get notified when we post new content. We're going to put out more of this. Make sure you're paying attention. Selectrealty.com. We'll get some great articles up there and some statistics.
And put the article from East Cobb News for the HB 581 on there. So people
we'll have a link there so everybody can follow up. And then join us next week. We'll be in February. We'll have the data from January. So we'll be able to go through and tell you exactly how the year's off to a start in the real estate market.
My favorite month because it's my birthday and yours.
It's month, and it's winter break month. So if you haven't had enough school being gone in January, well, guess what?
They're coming back.
A whole week in February with them again. So looking forward to that.
Quality time.
Quality time with you. Have a great day, everybody. Rob, thank you so much for joining. Rob, if people want to find you, how are they going to find you?
I'd say just call me or text me. My cell phone number is 404-771-0341. Or you can visit our website, ehla.com.
And we'll post that as well.
Rob's information is under the resources section on selectrealty.com as vendors as well. You can find all of our great partners there, and we'll make sure we put that in the show notes. Rob, thank you for joining us.
Everybody, thank you, guys.
And we'll see you next week.
Bye.
Bye.